Kusang Pola, you're watching Bhutan Today's face-to-face program, and this is your host Yisha Dolma. We are pleased to welcome Dr. Pema Dorji from the Department of Macro Fiscal and Development Finance under the Ministry of Finance. His department plays a key role in managing the nation's economy, from shaping fiscal policies to overseeing public debt and external finance relations. As the rising prices affects households across the country, Dr. Dorji is here to help us understand what's driving inflation, how it impacts everyday life, and what steps can be taken to manage it. Welcome, sir. Thank you for joining me. Sir, so inflation is something that is affecting everyone, from rising food prices to higher transport costs, which is felt across the country, and the country's inflation is projected to reach 5.8% by December. So, sir, what are the main factors that are driving this increase?
Thank you, Rishi. Thank you for having me. Just before I answer your question, I just wanted to express that all the view expressed here is solely mine and does not really represent the views of the ministry. Having said that, what you have said on inflation is true, that it impacts the household as well as the broader economy. In terms of our projections of 5.8 towards the end of this year is mainly attributed to the ongoing trade escalations across the globe, and one of the driver of inflation around the world has always been the prices of the commodity and basically the commodity and fuels. So from that perspective, what we anticipated was that because of the recent talks between the Indian government and the US administration, we anticipated that the price would go up. With regards to within the domestic market, the inflationary pressure is not so much, because most of our inflation is cost push inflation, which means it is driven from India. Then this was basically a full projection from July publication. Now soon we will have a revised publication on it, and during that point in time we have not accounted the developments in India. Mainly the Indian government has now announced that they are going to revise the GST rates. So the downwards revision is likely going to have downwards impact on the inflation. Thus, we might also reduce the inflation projections numbers. But nevertheless, for now, what is important for an economy is not really the price going up and down. It's more on the stability of the prices. And if you look at the current inflation number, it's around 3.8% of actual inflation. So this is quite acceptable by our economic development. We are a low-income country. Our economy is growing at around 7.5%, and with that measure, some level of inflationary pressure should be there, mainly because as the price rises, there is a motivation for producers to produce more because they earn more profit. So some level of inflation is desirable. It is just that too much oscillation or volatility, that's something that we need to watch out for. And like I said before, the current projection is accounting the trade escalation and not accounting the GST development in India. And also you would know that most of our trade with India is classified into formal and informal trade. While GST is not supposed to have inflationary pressure, Indian GST is not supposed to have inflationary pressure in Bhutan, but nevertheless, because there are some open market procurement by our households across the border, this is anticipated to drive the price a little bit downwards. So we will make the projections accordingly, and in the next publication, I think it should go a little bit downwards.
Right, sir. So, sir, compared to the countries facing double-digit inflation, Bhutan's rate still seems moderate. On top of that, like you mentioned, that there will be trade escalation. How will it impact the prices in our economy?
Yes, thank you for the question, and I think in this present context, it's a very important question. If you look at the recent developments in trade, the policy uncertainty is a major driver of the most of the projections. And within the current context, the signal that we get isn't really clear, but yet again, for our economy, the biggest thing is what's happening in India and what will happen to India. And if you look at India, most of their economy is driven by the rise in consumption and investment within India to cater to domestic markets. And export, although important, is not very significant part of Indians' economy. So from that perspective, we see that even the escalation of trade tensions will not have major impact on Indian inflation. And currently, if you look at the Indian inflation, it hovers between 2 to 3%, which is a very good rate of inflation for a country economy of their size. And considering that, even the RBI has come up with a very neutral repo rate, the policy rate stance. So going by that, they are not anticipating much inflationary pressure. On top of that, with GST, the prices in the Indian economy are expected to go down. And thus, for us also, we are expecting the prices not to rise, and it will be quite stable. And contrary to that, those countries who are facing double-digit inflation, this is a very dangerous situation to be in, especially for us, because we are a landlocked country and everything is driven by, mostly driven by imports. So from that perspective, what it means is that the import prices have doubled, and under that circumstances, it will not only have an economic impact on the producers, but also on the household who are basically trading agricultural products. It will be very difficult for them to compete in that kind of market with such a high level of inflation. But for now, we are far from that, and then even with because of our close ties with India, both politically and economically, we don't anticipate much shock in terms of inflationary pressure. So it will be quite stable going ahead.
Sir, is the current inflation trend more of a result of global price pressure or domestic factors such as supply constraint or increased demand?
From what we see from the data, the current inflationary pressure is mostly coming from cost-push inflation, which means it's driven by global factors rather than the domestic. As I mentioned, this phenomena is mainly as a result of the impossible trinity and the way economics works. However, having said that, like I said, there needs to be a mechanism where the trade shock is being absorbed. And as a result, the pressure of all the demand side, whatever investment the government is making, whatever demand the households are making on account of increased household income, all boils down to the fact that we have a supply side constraint, and these demands are not met domestically. So what results is the fueling of import. As a result, most of this money goes out of the country, and the reserves starts declining. So, on account of the inflation, is the global factor that is resulting the inflation. But having said that, the trade shock of increased domestic demand is mainly caused by the supply side constraint.
So how prepared is the Royal Monetary Authority to manage inflation if it still continues to rise, and what policy tools are available?
Yes. Thank you. Like I said, because of the impossible trinity, the central bank in Bhutan does not have the monetary autonomy to control over the inflation. Although it is desirable from their account, but this is not how economics works. So they do not have the much ability. However, having said that, now with as I mentioned before, how the transmission mechanism takes place in domestic market, with the increased demand both from household and government, what happens is that there are huge liquidity in the market, which is chasing very few goods, which means the supply side constraint. Our private sectors are not able to supply whatever the demand side is demanding. And that's where there's a huge excess liquidity in the market. This phenomenon we have observed around 3 times since 2012, and that is where RMA can play a vital role, especially in terms of liquidity management. And we are closely working with the Royal Monetary Authority, and of course the Royal Monetary Authority has been actively coming up with different policies and tools to intervene in the market to swipe up the excess liquidity such that it doesn't create too much pressure on the reserves. So as I mentioned before, there is not much inflationary pressure in Bhutan because the pressure all falls on the reserves. And now RMA's one of the core function is to manage the reserves and such that there is no shock in the macroeconomic situation.
So, sir, for ordinary Bhutanese household, especially the low-income families, sir, how do you think their income are increasing to meet the increasing cost of the living, sir?
There is one very pertinent question, because as you know, the Bhutanese economy is mainly driven by capital-intensive driven growth. As a result, the labor participation in the market to drive their income up is not so well. So from that context, it is quite natural to have that concern. Nevertheless, you have to like there is something called network effect or snowball effect. When something in the economy grows, it also pulls the other thing, and it is vice versa. If something goes down, then the rest of the economy also crashes along with it. And for us, the main driver has been hydropower, and as a result, the government is able to earn more revenue, and as a result, the government has been spending this money to redistribute and reallocate resources for balanced regional development, and also to increase the income and livelihood of low-income people. So this is evident from the income earning capacity. If you study from 2005 till date, you can see that it's more like a Lorentz curve, where we study this kind of inequality, and you can see that inequality in Bhutan has shrunk. It means the society is becoming more equal. People may not believe it, but that is what the data says. And essentially what it means is that it is not account of reduction of income of the rich, but it is on account of increase in household income of the poor people. So we can see almost a better distribution of income as compared to before. So while these challenges are still there as to how this low-income household really integrates into the market and tap onto the growth that Bhutan is enjoying right now, yet they are not totally left behind. They are coming on, but we have to I think there are many policy considerations from the government side, especially on the agricultural development, thereby resulting in increased income for the lower households.
So countries' inflation has often tracked India's. How does the Reserve Bank of India monetary policy influence Bhutan's price stability?
Thank you. That's another good question. The RBI currently, as I mentioned before, has a neutral monetary policy stance. This means that India is not anticipating much change in terms of inflation expectation, but however they are also cautious of the trade policy uncertainty, and also the positive side is that there is GST coming in, so it's a counterbalance to each other. So therefore RBI's policy has been neutral, and one of the reasons for that is Indians rupee has been like overvalued compared to its trading partners, and only very recently we call it real effective interest rate, exchange rate. The real effective exchange rate has been declining. Previously it used to be around 108. Now it got down to about 100, which is a perfect, which in economics is a perfect sense of improving the competitiveness of an economy. So that's why you see that despite the dollar, despite the Indian rupee depreciating, the RBI has not made much changes in its monetary policy stance so as to gain that comparative advantage. So because of that reason, you can see that despite the recent trade escalation between India and US administration, you see that it has not impacted India's export. That is because, as I mentioned before, there we call it RER in short. The real effective exchange rate has been improving. It has been down to 100 from 108, and that is mostly attributed to a very low and stable inflation in domestic market and the depreciating INR in the external market. And as a result, now India is becoming more competitive in terms of export. So from that perspective, for Bhutan, it's a very good news. As I mentioned before, most of the inflation in Buddhist context is from India, and even the economic growth rate and everything aligns closely with Indian progress. So if they make progress, it's more beneficial for us also.
Right, sir. Looking ahead to 2026, do you expect inflation to ease or increase as a result of GST implementation or any other factors? And what can country do to ensure price stability without slowing economic growth?
Yes. Thank you. In 2026, as you mentioned, we are going to be implementing the goods and service tax. And with goods and service tax, with the GST, what it means is that it's a very broad-based tax. So currently we have around 38% of goods and services which are not taxed, but under GST, everything will be taxed at a very flat rate of 5%. Now, because of this, there is an anticipation of an inflationary pressure. So there will be some inflationary pressure on this account. And for that reason, the government also passed another bill to reduce the income tax. So what it does is that on one hand we have the inflationary pressure, on the other hand we have the income effect. We call it income effect, which means that on account of reduced taxes, the disposable income of the individual should increase, or the household should increase, and this should be able to mitigate the increase of prices on account of GST, inflation brought in by GST. And it is not very significant. We anticipate that the increased inflationary pressure will be just around 2 percentage points maximum. So it is yet to be seen, but that is just an estimation. And nevertheless, on account of the income effect brought in by reduction in income tax, the household should be quite okay to handle the inflationary pressure. Now, having said that, from the perspective of the economic growth, as I have mentioned before, a little bit of inflation is desirable in the economy, and especially for a young economy like ours, 3 to 4% inflation is quite desirable, even to the extent of 5%. Inflation going up to that level will not necessarily slow down the economy. The only thing that we have to be cautious about is our reserve management. Now, if we are consistently not able to increase the supply side, then it is inevitable that our reserves will drain, because we are not exporting much, but we are importing everything. So we need dollars and rupees to import goods and services, then we have to take on loans and things like that. So the reserves, pressure on reserves will be there on account of the supply side constraint and increase in demand. But the prices are not really going to be affected too much on that account. And for us to maintain our growth trajectory, it is better for, we are also working on it, and then we have the view that the RMA and Ministry of Finance should work together and preempt any increase in liquidity to stop it from the market, such that it does not create overheating in the economy. So with that tools, we hope to be able to manage the economy and not resort to any sort of moratoriums and things like that was imposed previously.
Thank you for your valuable insight. With inflation affecting daily life, it is important to stay informed and prepared as the country works to maintain price and growth stability in uncertain time. Thank you for watching. Until next time.